The IRS made some rule changes now gonna be implemented for the fiscal year of 2024. So here are the changes. So the IRS made a huge change for the tax brackets for the year of 2024. So now you gotta ask yourself, whether is it beneficial to all taxpayers is really determined by the majority of the tax bracket that you and me are in. So the most important part is that this new rule was changed because of inflation that skyrocketed during the year 2020. It took them nearly 4 years to implement changes to help the taxpayers by increasing the marginal rates for income return. So now, you tell me if the change is fair or not. So here's the IRS change for the 2024 fiscal year. The standard deduction for married couples filing jointly for the tax year of 2024 rises to around $29,000, which is an increase of $1,500 from the tax year 2023. It's basically a drop in the ocean. So you ask yourself, as for single taxpayers and married individuals filing separately, the standard deduction rises from $14,600 for 2024, an increase of $750 from 2023, and for the head of households, the standard deduction will be $21,900 for the tax year 2024, an increase of $1,100 from the amount of tax year for 2023, which is a disgrace. Now, if you think about it, how much more money that the average American make compared, let's say, 2 decades ago? It's completely massive. So this marginal increase doesn't really mean crap. And this is not even a straight middle finger. I'll get more into it. So first, you gotta understand, the marginal rates for the tax year 2024, the top tax rate remains at 37% for individual single taxpayers with incomes greater of $609,000 and $731,000 for married couples filing jointly. So here are the other rates. And of course, that one doesn't really apply to most people, but most of these below will apply to majority of people watching my videos. So 35% of incomes making over $243,000 and $487,000 for married couples filing jointly. The top 32% of incomes making over $191,000, $383,000 for married couples filing jointly. Next, 24% of incomes over $100,000 up to $201,000 for married couples filing jointly. This is gonna be a majority of you guys of the tax bracket who have pretty well-paying jobs. And next one goes down to 22% for incomes making over $47,000, $94,000 married couples filing jointly. This is applied to majority of the Americans, and here is the more bottom half. Basically, people collecting like Social Security, which is 12% of incomes of $11,000. $23,000 for married couples filing jointly. So the lowest rate is around 10% of individuals earning of incomes of $11,600 or less than $23,000 for married couples filing jointly. Now, here's the most ironic part in all of this. What I just mentioned earlier, it all sounds like doesn't really much change, but in reality, there's actually a massive change. So all sounds good until they increase the income and marginal rates to make the taxpayers pay less tax. That's all it seems. But here's the catcher. It makes it seem that most of our money will be taxed at a lower rate because it all sounds good if you think about it for a second. That is just income tax. So the government thinks that majority of the people wouldn't notice that the income tax is just part of the equation, as I mentioned many times before in previous videos. How about the rest? Have you ever thought about property tax? You got sales tax, you got luxury tax, gasoline tax, and many more, you name it. There's too much to list. If I could list it all, I can make another complete separate video. So if you think about it, if the government meant this to be, basically cutting us tax for us taxpayers because of inflation, did they ever calculate inflation to our paychecks also? Our paychecks has increased compared to 20 years ago. So if you think about it, that's about 2% a year from like 2000 until now, almost 2024. Did they ever change for that, calculate inflation for our paychecks? No. So this means that they didn't even bother to think about how many Americans make way more compared to early 2000s, which means they will be taxed at a higher bracket still. I mean, just look at the jump from 12% to 22%. Now, here's another one that IRS gave a middle finger to the rest of us. Look at net investment and income tax. So they didn't adjust that to inflation that we still get an extra 3.8% for every income we earn through dividends, interest incomes, and capital gains. They never adjust that for inflation. We make way more than before. We make way more dividends, way more interest income, and our stocks became way more expensive. Think about it. People who bought, let's say, Apple for the year 2000. Let's say, or they bought Microsoft the year 2000, and they bought Apple around like 2010. So if you look about that from back then until now, the income has changed drastically. Let's say you sold your Apple stock, you bought Apple stock for like $200, and now you sell it for $1,000, and you have like 13,000 shares. Did they calculate that for inflation? Did they change our capital gains tax? No, they did not. They only changed a little bit. They considered this a win. In reality, it's just a cover-up for how much BS that they're creating and how screwed is the American taxpayer. So this is it for the video, and there's a lot of other topics to cover because this is just the brink of what the IRS has supposedly made changes for to help us taxpayers, you and me. Now, if you don't think it's fair, you gotta vote with your wallets and vote on the boost and stance. So the best thing to do after the end of this video, make sure to click the subscribe button down below and a like button. I'll see you guys next time.